Welcome to my channel. Today's class is about the change in the profit sharing ratio among the existing partners. Partners in a firm share profits or losses in their agreed ratio. In the absence of any agreement, they share the profits and losses equally. Sometimes the existing partners in the firm may decide to change their profit sharing ratio. When a change is to be effected, there arises sacrifice on the part of some. Sacrifice means there will be reduction in the profit sharing ratio while others gain, means there is an increase in the profit sharing ratio. Those who gain must compensate the others who have made the sacrifice. This effectively amounts to a purchase of share of profits by one partner from other partner. So the sacrificing partner will get one share of profit from the gaining partner. For example, A and B are two partners sharing profits and losses in the ratio 3:2. They decide to share the profits in the future equally. So there will be change in the profit sharing ratio. Earlier the ratio was 3 by 5 is to 3 by 5 and 2 by 5. They decide to change the profit sharing ratio into 1 by 2. So there will be change in the profit sharing ratio. Suppose the total profit of the firm is 100. Earlier A was getting 60 and B was getting 40. In the change circumstances, both of them will get 50. That is, they are getting equal amount of profit. So that will be 50. That is 100 divided by 2. It means that out of the 100 rupees, A loses 10 rupees. Previously A got 60 rupees. Now he is getting 50 rupees. So there will be 60 minus 50. There is a loss of 10 rupees for A and B gains 10. That is, earlier it was for B was 40. Now it is 50. So 50 minus 40, 10 rupees he is gaining. In other words, A loses 1 by 10th. That is 3 by 5. 3 by 5 was the earlier ratio, profit share ratio of A. Now it is 1 by 2. So 3 by 5 minus 1 by 2, that is 1 by 10. And B's gain will be 1 by 10. That is 1 by 2 minus 2 by 5. 1 by 2 was the earlier ratio minus 2 by 5. It is not 25, it is 2 by 5. In the above example, the gaining partner B should compensate the sacrificing partner A. The compensation is in the form of a proportionate share of the firm's total goodwill. He is giving a proportion of goodwill of himself to the sacrificing partner. Suppose the total amount of goodwill of the firm is ascertained at rupees 50,000 at the time of change in profit sharing ratio. B is the gaining part. B must compensate for 1 by 10th of 50,000, that is 5,000. Proportionate share of goodwill. Accounting treatment. In the above case, B is the gaining partner on account of change in the profit sharing ratio. The gaining partner may pay proportionate amount of goodwill in cash directly to the sacrificing partner. In such a case, no journal is passed in the partnership books. Usually, the proportionate value of goodwill is adjusted to the capital account of the partners. That is, B's capital account debited to A's capital. B is giving capital to A. Capital has a credit balance, so increases capital will be credited. B's capital is decreasing, so it is debiting. So B's capital is debited. Amount is 5,000. Narration is adjustment of amount payable to A by B on change in the profit sharing ratio. Here is the problem. A and B have been carrying on business, sharing profits and losses in the ratio of 2:3. With effect from 1st January 2010, they agreed to make change in the profit sharing ratio. Their new profit sharing ratio was agreed at 3:2. The total goodwill of the firm was valued at 60,000. Was the adjustment entry for the above. So we have to first calculate the sacrifice and gain between the partners. So we have to write the heading as calculation of sacrifice and gain between the partners. Existing ratio is 2:2, 2:3. So A's share will be 2 by 5 and B's share will be 3 by 5. New ratio is given the question as 3:2. So A's share is 3 by 5 and B's is 2 by 5. A's sacrifice or gain. Here previous it is 2 by 5, now it is 3 by 5. So there will be a gain of 1 by 5. 3 by 5 it is got by subtracting 3 by 5 minus 2 by 5. That will be 1 by 5, it is gain. B is a sacrifice or gain. That is earlier it was 3 by 5, now it is 2 by 5. So there will be a decrease in the ratio, that is 1 by 5. That will be got by subtracting 3 by 5 minus 2 by 5. That is 1 by 5, it is sacrifice. So here it is gaining partner is A. So A must pay 1 by 5. 1 by 5 is the ratio of gain. So 1 by 5th of the total goodwill. Total goodwill is given the question as 60,000. So 1 by 5 of 60,000 will be 12,000. Then the journal entry is the gaining partner is A. So A's capital account debited to B's. Here capital account is not written. We have to write it as A's capital account debited to B's capital account. The amount that is calculated 12,000. 12,000 debit and 12,000 credit. Narration will be adjustment for sum payable by A to B on change in the profit sharing ratio. That's all for today. Thank you.